Good morning, traders. It is 8:04 a.m. Chicago time on Friday. Happy Friday, everyone. The 14th of April, 2023. This is episode number 2449. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick reminder that yesterday could not do a show. I had a sick wife and my 5-year-old as well. And there was just too much going on and I had to care for them while also getting my 15-month-old to daycare. So there was just no way for me to squeeze anything in. I did manage for Convergent members, I did manage to release a Trader Bite, a short Trader Bite for Convergent members. Very close to the open. For those of you who didn't see it, it was posted in the Maven's channel. Let's dig into what we've got today here. So we're opening up mixed again. We've been opening up mixed. The market has not been disjointed very much other than when, major news releases have come through, non-farm payroll and so on, although non-farm payroll is a holiday. But mixed open, we seem to coil and consolidate at the open and then kind of just grind for the first hour, hour and a half, and then take off during the quiet hours. That's what we've been doing lately. This morning we had United Health Care. We had JP Morgan, Chase, Jamie Dimon has been on the wires this morning. Wells Fargo, Citigroup, PNC, BlackRock. These are all major players. Today kicks off all the big earnings releases, and that's likely what will drive us into the next Fed meeting. So that's where we stand. After the close, nothing major, so I'll be covering earnings every morning now because they matter. JP Morgan beat by 20% on the headline number. Came in at $4.10, expected at $3.41. It's a huge beat. Let me turn down my news feed here, a lot of noise. And then on a 10% beat on, 9% beat on revenue, United Health Group was in line. Wells Fargo beat by 8.85% on earnings, and PNC beat by 8.45% on about $5.6 billion in earnings. Their revenue came in line. BlackRock was pretty much in line, beat by 2.59%. So again, this kicks off some of the bigger earnings now, and we need to pay attention to that. U.S. retail sales lower than expected by quite a bit, actually. This is another kind of deflationary indication. Came in at negative 1% for March month-on-month versus negative 0.4 expected. Retail sales ex autos came in at negative 0.8. Expected at negative 0.3. Import prices, negative 0.6 on import prices, and export prices came in at negative 0.3. So that's where we stand. We do have comments from Fed's Waller going across, and we have industrial production coming in at 9:50 Eastern. And then Michigan Sentiment Prelim, this is a big one. Michigan Sentiment Prelim at 10 o'clock, expecting 62. And then business inventories for the month of February, which is kind of stale, expected at 0.3. And that pretty much wraps up the day for today. We have U.S. Treasury Secretaries Yellen meeting with Bank of England's Bailey later on. But I'm suspecting that after the European close, we may see a lull. So that's where we are. Looking at the S&P real quick, stats-wise, the S&P is in a balanced profile. It's got a negative inventory this morning. Short inventories is 81%. of the total volume, and we've only got about 16 points of range, so not much range, but the volume is pretty good. The volume's in line with what we would expect to be normal. So there's been a fair amount of activity in the overnight session, but the range doesn't show it. What we do note, first and foremost, is that the S&P is not giving up any territory. So we built these interesting kind of balancing profiles with a bullish kick to them last week and earlier this week, and then we managed to break to the upside, and then we managed to finally yesterday take out the prior weekly high at 63 and a quarter to put in a new high at 77.50. And what we've done since is we've kind of held to the upper distribution in the overnight session. The overnight session high is 77.50 as well. So overall, we're just not backing off, which tells me that the bulls are still in control, and we're not likely to rotate down very much from what I'm seeing. I mean, we're at new high territory. We have kind of a cup and handle kind of formation here. This really speaks to higher prices, looking for 83 next, and then 4204. 4204, the 4200 century figure is now a magnet, and that's where that stands. Looking at the NQ is actually relatively weaker. You'll notice that the NQ didn't take out the prior week's high, and it's kind of sitting in this consolidation zone. Yesterday, it managed to break out by putting in a low volume node, some singles, and breaking out through these highs, these multiple highs, but it still has a little bit to go to get to that 13,300 area, and that's what I'm expecting from it. This morning, it's back in balance. See where it's trading there? It's back in balance. It's in the lower distribution. For some reason, although it seems the environment would be very supportive of the NASDAQ type stocks, in that we have better predictability of what the Fed is likely to do, and we have a market that where prices are coming down. It seems to me, and a lot of cost cutting in a form of cutting jobs, it would seem to me like the NASDAQ stocks would be ripe for a push higher, but so far it's been pretty tough to break out of this balance. So the NQ has been sort of lazy, more lazy than the ES is. Looking at crude classic, very tight flag here, big zipper, and then we break away from it, closed pretty strong, and then yesterday we opened right in the middle, closed relatively weak. This morning we're opening weak, and we are kind of fiddling around. The expectation here is we're likely to test the 8150 area right down here. Overnight it went to 8176, but expecting it to come down to the prior balance before consolidating. It seems like crude is moving in fits and spurts rather than a kind of a consistent momentum-driven trade. It's just repricing, holding steady, repricing, holding steady. That's what's setting up there. Looking at the intraday charts, let's throw up some Russell here. Russell, for those of you who attended the Trade Talk Convergent on Tuesday, we talked about this, where the Russell has really taken a beating relative to the other indices. It's much, much weaker, as you can see here. But the Russell, if it's able to clear this 1820 area, 1820, 27, something like that, it puts it in this really thin zone, this structure. There's the 20 right here. It puts it right into this thin area, this big selling day from a couple weeks ago on that SVB news. The expectation is the Russell may outperform the others short term once it gets up there to rebalance up at 1900. The Russell is currently trading at 1809, so that's 90 points or so to the upside. The Russell seems underpriced to me, based on where we stand in terms of the macro as well as the micro picture. So there's that. And then the ES, picture of the ES, this is what I was talking about. If you look at the ES profile, we've done this. Let's put a volume profile on here. So let's grab this bar and build a profile all the way through to here. And if we look at this profile, we'll see that, let's make the POC white. We'll see that the overall POC right here is at 130.75, which is where we opened yesterday. We opened right against the 130.75. And then what we have in the S&P is initiative buying. Initiative buying. So what we've done is we've moved from the balance right here. We've been balancing, we gapped up, and we've been balancing for quite some time, since the beginning of the month. And what we've done is we have initiative buying away from balance, away from this high volume node, relatively mature profile. We're moving away from this point of control. And to me, with initiative buying, this is a market where very, very likely participants are going to buy the dips. So this morning, even though we're hovering at the 61.75 area or so, yesterday, the prior day's high is 61. The expectation is this is just a pullback in here, and then it's likely to kind of retest settlement at 72.75 and take out 77.50 unless some news comes out. There's not much significant news other than Michigan sentiment this morning. Again, Michigan sentiment expecting 62 at 10 o'clock, so in about 45 minutes. Unless that reprices poorly, my primary scenario is that it's likely to push through to 83. And again, like I said before, 42.04 is the next key test area. That's what I'm seeing here in the S&P. Why? Because we have consolidated. We've built a nice big coil here. And then yesterday we broke away from the coil. That's the best information that I have now. And unless it falls back in below that 60, not just 63 and a quarter yet, last week's high, but below 60, unless it gets down there, then the expectation is any push down is a likely pullback for a continuation higher on a swing basis. So that's how the S&P is shaped. The NQ, same story, just like I talked about, been consolidating in here. So if you look at these days right here, complete consolidation, a very clear box. And then yesterday it ended up moving away. But this morning it's opening weak. It's opening down here. It's opening right in the box. So the NASDAQ has a magnet down here now that is very likely to be challenged, which is down at 13,080. You've heard me talk about 13,080 quite a bit, and we seem to have a hard time moving away from that. So the NQ kind of creates a divergence with the ES and may lead the ES to be to have a hard time pushing higher because there are some cross components in there. That are likely to be traded lower that will also show up in the S&P, so we'll wait and see. But overall, the market's opening on top of yesterday's upper distribution. We're in balance in the overnight session. We're just below in the S&P. We're just below mid and VWAP. And if we look at the relative delta, if we look at the relative delta overnight, so this is the overnight relative delta here, you can see that the overall delta is quite positive, but it's ruled by small lots. There's some large lot participation in here, which is great. Which is great, but So for me, this looks like a pullback. So this looks to me like a pullback. We're likely to tangle with VWAP mid on the open. So expect it to be a relatively noisy open is my opinion. So that's where I stand on that. That's the hill I'm going to die on today. So, and then looking at the NASDAQ, pretty weak, right? So this is what I was talking about. The NASDAQ may cause some drag across the board into the S&P and into the Dow this morning. Very likely to do that. Let me flip this back, flip this forward. Very likely to do that. Russell, all small lots. Russell is very likely to just chop around and have a hard time breaking through this 1812 area early. 1812, 1813, right in here. Very large, and the large lots are weak this morning with the small lots carrying the load. So we'll see. It's really hard to say. So my plan this morning is really to wait to see what the Michigan sentiment will do. And then my bias in the ES continues to be long on that initiative buying, right? So that's a really important idea. But my plan is to see what Michigan sentiment does. Once that number is behind us, that may be a catalyst. Once that number is behind us, then we need to look at rotations and decide, is the S&P going to fall back into balance now that it tested higher, or is it going to pull back for a continuation higher? That's to be determined, okay? There's nothing definitive that can be said here. Not much can be gleaned from the action in the overnight session. I mean, look at the overnight session. There's just not much here to talk about, okay? It is Friday. I think spring break ends today, so things should be back to normal. Volume should be back to normal next week. Good luck, and I'll catch you Monday morning. Take care.